Hello, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com. Now, this is a quick technical look at the sterling versus US dollar as it waffles back and forth between, well, support and resistance. I have the daily chart up here, and what we saw in last week's trading, the market got close to this 200-day moving average. That's a green line in the chart. You know, this was as close as it got here on the downward move. We also went and tested this trend line last week. Market held that trend line, started to rotate back to the downside. And in trading yesterday, the market came right down toward the 100-day moving average, got within about 8 pips of that moving average right here. And the market stalled at that level and started to rotate back to the upside. Now, in trading today, we've seen a sharp move to the upside as well. Now, this was off of that fat finger, maybe algo trade. Whatever happened in the Asian Pacific session, the market shot up about 200 pips to the top side, and we came right up to this top side area right here. I mean, it looks okay on the daily chart. On the hourly chart, it kind of looks kind of ugly, but I'll show you that in a second. But this high corresponded with this high for the most part. We went above that area through here and through here, but held it right here as well, as you can see. So there were three holds, or three or so holds of that top side area around the 146.66 level, and the market started to rotate to the downside. So if I were to put a wide angle on the sterling versus US dollar, and of course we have the Brexit vote coming up later on this month, which is on the 23rd, which is going to have a big influence on this currency pair one way or the other, or should. And the polls between now and then are going to cause some volatility in this currency pair. I would say that those are the wide extremes at the moment: the 200-day moving average, the 100-day moving average, and this trend line as well, which is very near to the 200-day moving average. So stay or think that the market might find resistance there, support there. If it breaks out of that range, then we should see further run to the upside. On the top side, we have the top side trend line, 50% retracement of this move to the downside. Those things come into play. On the downside, we have the bottom side trend line, and then we start to look toward our low areas that we had through January, February, March, stuff like that. So that's the daily chart. That's the broad picture of the sterling versus US dollar. Let's dig down a little closer into the hourly chart here, and here's that spike that we saw in the Asian Pacific session. Just raced up about 200 pips in one bar, all the way up, then back down. We have seen the market rebound, and we got above. Ignore this bar right here. We got above the 200-hour moving average. That's a green line in this chart. And if you go back over time and you just look at the action around the 200-hour moving average, it's kind of caused an area where there is either support or resistance, or even a move away from it. Okay, a move away from it. And so in today's trading, when the market moved back above that 200-hour moving average after this spike, again, we'll ignore that, the market moved to the upside, and then we came back down in this New York session. And where do we find support? Right there against that 200-hour moving average. So if you're going to play a little intraday type of trading, and I do recommend that if you trade the sterling versus US dollar, you keep a really close eye on it, because it's kind of risky out there with these polls that come out at random times and stuff like that. So you have to be careful about it. You could see quick moves through these levels. But if you feel like the urge to get involved, the 200-hour moving average seems to be a moving average line that the market is paying attention to. So think about that in your trading. But again, caution. Now, before I go, let me remind everybody that we have a webinar coming out on Thursday, June 9th. That's going to be at 3 p.m. Eastern, 1900 Greenwich Mean Time. The title is going to be How to Increase Your Trust in Your Forex Trading. What does that mean? What does having trust in your trading mean to you? What is behind that trust? And that is going to be my focus on this webinar, is how you can increase your trust in your Forex trading by using certain things that, well, I don't want to spoil. Let's talk about it on Thursday. So make sure you sign up for that. I'll put the link at the bottom of this video on our website at forexlive.com, and just click on that and be sure to register. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.